Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of company filings. Today we're diving into a report from Planet Labs PBC, and let's just say things are getting interesting with some of their shareholders' rewards. So, what is the big deal? Planet Labs, a company that is all about Earth observation, has just issued a bunch of new stock, but it is not for everyone. It is tied to performance incentives, and it looks like some of those goals have been met. Let's break down what this means for the company and its investors. First off, this filing is about a company called Planet Labs PBC. You might know them as that satellite imagery company that's mapping our planet from space. This report is a look at some recent events, specifically around their stock, and how certain shareholders are getting rewarded based on performance. The company itself, Planet Labs PBC, is a public benefit corporation incorporated in California. They've got stock trading on the New York Stock Exchange under the ticker symbol PL for their class, a common stock, and PLWS for their warrants. The key date here is the 13th of January 2026. This is when some significant actions took place regarding the company's stock. Now let's get to the meat of it. The company is mainly talking about issuing something called earnout shares. Think of these as bonus shares given to certain people or groups associated with the company. It all goes back to a merger agreement from July 2021. The idea was that if the company hit certain financial milestones, specifically related to the trading price of its class of common stock, these bonus shares would be issued. The company had a plan to potentially issue up to 27 million shares of common stock as a reward. These rewards were structured in 4 parts, or tranches, and they would be triggered if the closing stock price hit $15, $17, $19, and $21 per S-share over specific periods before the 5th anniversary of the merger. This creates a real incentive for the company to perform well and for its stock to rise. And on that date, the 13th of January 2026, some of those goals were met. The company issued over 10 million shares of Class A common stock and more than 1 million shares of Class B common stock. This happened because the stock price stayed above $15 and $17 for a decent stretch of time. This means that the people who were supposed to get these shares as a reward are now receiving them. After these issuances, Planet Labs' total outstanding shares of Class A common stock grew to over 306 million, and Class B shares went up to over 22 million. The Class B shares are interesting because they come with more voting power, 20 votes per S-share, which is a significant weighting. There is another part to this story involving what is called sponsor earnout securities. This relates to a deal with Dami Sponsor IV, LLC, which sounds like an investment group that helped bring Planet Labs public. They had their own set of bonus shares and warrants attached to similar stock price performance. And guess what? Part of those rewards for the sponsor also vested. 50% of their bonus shares and warrants are now unlocked because those same stock price targets of $15 and $17 were hit. This is essentially a partial payout of performance-based compensation. When we look at this, Planet Labs is clearly using stock incentives to align the interests of key stakeholders with the company's success. They are tying executive and investor rewards directly to market performance, specifically the value of their common stock. This can be a smart strategy to motivate and retain talent and early backers. The fact that these earnout conditions were met shows that at least for a period, the company's stock has performed well, hitting those important price points. However, we need to remember that these are earnouts. They are essentially deferred compensation that only kicks in if the company's stock performs. The Class B shares having 20 votes per S-share is also a significant detail. It means that a smaller number of Class B shareholders have a very large say in how the company is run, which can concentration of power. The risks here are that these earnouts become a significant dilution of existing shareholder value if not managed carefully. While it is good that performance is being rewarded, existing shareholders might see their ownership stake reduced as more shares flood the market. Also, the reliance on stock price performance for these rewards means that any market downturn could delay or negate these bonuses, potentially impacting morale or investor relations. Looking at the bigger picture, Planet Labs operates in a competitive space. Satellite imagery and data analytics are growing fields, but there are other players. For Planet Labs to continue hitting these performance targets, and thus rewarding its stakeholders, they need to keep innovating, securing contracts, and demonstrating tangible value to customers and investors. The fact that they've hit these initial earnout targets is a positive signal, but the long-term success will depend on sustained growth and profitability. So, what is the take? Planet Labs shows a clear commitment to rewarding performance, which is a good sign for potential future growth. They've met some initial milestones, unlocking shares for key parties. The concentration of voting power with Class B shares is something to watch. But for now, hitting these earnout targets suggests a degree of confidence in their business trajectory and stock market performance. Alright, that is our breakdown of Planet Labs PBC's recent filing. What is your take on these stock issuances and what they signal for the company's future? Do you think these performance-based rewards are a good model? Drop your thoughts and insights in the comments below. If this analysis was valuable to you, please hit that like button and subscribe to Corporate Decoder for more deep dives into the financial world. And don't forget to join our Discord community. The link is in the description for even more discussions. Thanks for watching, and we'll see you in the next video.